the disappearing center of gravity. For a decade, the signal in this market was simple: follow Bitcoin. When the world's largest cryptocurrency rose, money flooded into startups and thousands of speculative tokens. When it crashed, the industry held its breath. The noise right now is focused on Bitcoin's recent slide below $60,000. But the real trend dominating investor calls and backroom tech meetings isn't just a price drop. It's a narrative decoupling. Money is aggressively leaving exchange-traded funds, but it isn't just going into cash, it's fleeing to an AI boom. Today, we dissect why OpenAI's confidential S1 filing and the dream of the super app are creating a gravity well stronger than the Bitcoin cycle. Welcome back to the Signal and Noise podcast. My name is Newell. Let's dive in. The AI infiltration, from chatbots to super apps. While crypto Twitter argues about electrical cost floors sitting at $48,694, the Silicon Valley machine is moving toward its endgame. The OpenAI pivot. Reports suggest OpenAI is moving to kill the chatbot and transform it into a super app. They are signaling a path to a public market debut that could suck the oxygen out of every other tech trade. It's not just a Western trend. China's Xiaomi Mimo is reportedly already 15 times faster than ChatGPT and Claude. The competition for AI dominance is moving at a speed that makes the Bitcoin block time look like a sundial. This is where the signal lies. While Bitcoin is called boring by AI-hungry retail investors, real businesses are pivoting. Much of the altcoin market is suffering a downturn. Entire ecosystems are consolidating, while stablecoins and tokenized bonds are growing. But there is a physical war happening that the market is just starting to price in. It's the war for compute and energy. Miners are realizing their infrastructure is worth more as an AI data center than a Bitcoin farm. We are seeing a rise in AI-powered Bitcoin freedom meetups. People are looking at how AI agents can automate wealth strategies. Institutional players are looking for cleaner tech plays as the Clarity Act passage odds drop amid ethics objections. AI offers a narrative of immediate, measurable productivity growth that crypto's future of finance promise is currently struggling to match. If you're holding a portfolio of 2021-era Ethereum killers or DeFi 1.0 protocols, you need to look critically at the data. The market value of altcoins peaked at $431 billion in November 2021. Today, it's languishing around $170 billion. Security is still the Achilles heel. We just saw Humanity Protocol hacked for $32 million, with its token crashing over 80%. The only altcoins surviving the AI winter are those moving toward real yield. Banks are experimenting with blockchain and stablecoins. So where does this leave us? Is Bitcoin dead? Not according to the smart money. The 150,000 target remains. Despite the boredom, Bernstein and other Wall Street firms still see Bitcoin hitting $150,000 this year. Circle just launched CIRBTC, and Coinbase is unveiling credit cards backed by stablecoins. The rails are being built. The biggest trends for the rest of 2026 aren't meme coins. They are AI and crypto operations and on-chain government bonds. So, what's the verdict? Bitcoin is no longer the undisputed center of gravity. It is becoming a settlement layer for a much larger tech economy. The move: stop looking for the next Bitcoin in the altcoin graveyard. Look for stablecoins, tokenized real-world assets, and AI agents. The market is boring because the speculative era is over. The utility era has begun. Stay sharp. Stay focused. That's it for this edition of the Signal and Noise podcast. If you want to know where the money is moving, you have to look at the pipes. Do like and subscribe. We'll see you in the next one.